right, everybody. Chat SOB episode 3 here with my pals. Oh, I missed the crack of the beer.
It was so close. It was so close.
Here with Iggy, Patrick, myself, Greg Royal, and I thought we'd talk about economic-related things today, something we're all interested in, for sure.
Boring,
yes. So if you don't like economic topics, you probably want to go, I don't know, watch South Park.
But wait, before you do, we're going to talk about a lot of stuff people should know.
Yes.
And choose to maybe ignore.
It's not going to be boring.
I think it's going to be exciting.
This can be a passionate topic for us.
Yeah. So the state of the economy, both the real estate economy, nationally, locally, the general economy, all things considered. Who wants to start? Patrick's pretty opinionated. Why don't you start? Where are we at,
Patrick? Why is everything bad?
Why is everything bad? I mean, my question is, why is everything bad, and yet nobody really knows it? Right?
Right?
Mull gloom.
Yes, you are famous for Mull gloom.
I mean, so much of this to me is when we're looking across the data that's now piling in, other than the stock market, we are seeing Germany admitting they're in a recession. Now, let's remember, at the end of last year, Germany said they were going to avoid a recession. Literally, they came out, the chancellor came out and said, we're not. A recession would be a couple quarters of negative GDP. Right.
That was the case until we redefined it last year, right?
Until then, it didn't matter here. Right. So we've avoided a recession ever since.
Recessions are gray lines on graphs, is the way I understand it.
Yeah.
They're gray shaded areas, and that's all I know.
Avoid.
Yeah.
So that was one of the things that just popped up yesterday, where I said, look, Germany now the powerhouse of the world. They're fourth biggest economy, I think, right? Is that
biggest
correct?
In Europe, I know.
Biggest in Europe, and I think they're number 4 in the world behind Japan, us, China.
That's it.
So here they admit we're in trouble. They said they weren't going to be in trouble, and yet everything here is still like, we're fine. We're fine, but I mean, this is pretty significant for Europe.
Yeah, for sure. Okay, none of us live in Europe, though.
So. We don't.
And I know Italy's going to be fine because I'm going to Italy on Sunday.
You'll spend plenty of money there.
So, yes, their economy's about to get a boost from the O'Boyles. So.
The old boil boost.
I mean, I think each of us kind of follows overlays of what each other follows. So I'm just curious, like, what are you guys seeing and what are you feeling? If you kind of zoom out 30,000 feet and then dwell in locally.
Well, I mean, I think the funniest thing going on right now relates to what we're doing, our little chat SOB. Chat GPT or AI, right? Like, that's the buzzword. If you're at all following anything in the stock market, the only things that are keeping the stock market from going down are companies that have anything related to AI in their business model. Or they say they have something related to AI when they actually don't, but they don't want their stock to crash. I think we saw yesterday, or over the last 48 hours, the company NVIDIA gain $250 billion in market cap, which is equal to the size of their 2 closest competitors' market cap in total. Not just one's, 2. It's like NVIDIA became worth, it's like if they had bought for nothing, I think both Intel and Micron,
which is insane,
which is nuts. It's right. And so you've got a stock market in the last 2 days that absolutely rocketed up in the face of a potential government debt default, which we're pretty close to hitting.
A week. Right,
June 1st is what Yellen has said. We run out of money as a country.
Down to the wire.
Right, and at least as of 2:30 today, which is what 5:30 or 4:30 in the East Coast. I hadn't heard that they had a deal yet.
Yeah.
I think they're all going home for the holiday weekend.
We're like literally getting downrated as a country with Moody's. They're like, you guys suck, and everybody's like, well, is it Memorial Day weekend?
So I think that's an interesting factor. In the real estate space, something I think that's an interesting factor is you're getting home builders on the national level hit all-time or at least yearly highs in that space, and they're very optimistic. They're selling stuff like crazy. We aren't seeing, I think we can all speak to this, we aren't seeing really any more retreat in the real estate market. If anything, if you're on the lower end, we're seeing gains.
And that's locally.
Locally.
Correct.
Yeah.
Just to clarify.
Yeah, I mean, I'm obviously clarifying locally because we see that every day.
Yeah.
But I don't know. I talk to agents nationally that I'm connected to that seem to all be saying similar things.
But we did have the biggest drop month over month in 11 years as far as values went. Just nationally as a top figure.
Yeah, but I mean...
But from where, right? Like,
right, yeah.
Don't disagree.
Yeah.
Perspective,
you know, if you bought a home in 2021, you're making a lot of money still.
absolutely.
So I would say there's a lot of disconnect. There's a lot of things that say this is really bad and things that say, well, maybe this isn't really bad. You know, bond markets. I mean, you track that better than anybody else, Iggy. What are bond markets doing?
And can you explain kind of the bond market for
well, the
those that may
bond
not know?
market, and this isn't like for dummies, just the bond market's kind of like a little bit counterintuitive. As rates go up, the value of the bond goes down, right? So rates come down, value of the bond goes up. If I was to let Craig borrow $10 for a year versus letting him borrow money for 5 or 10 years, you would think that I would want less interest for a shorter time span because my money's tied up for, you know, a lesser amount of time. And you know, that yield is called the yield curve. So, you know, short-term loans to the U.S. government generally yield lower rates of return than long-term loans do. So, you know, generally like the 3-month yields less than the 6-month, yields less than the 1 year, and so on. Well, for going on like 8 or 9 months now, we've had a yield curve inversion that has been one of the deepest ever in history, at least since the Fed started keeping records. And the thing about the yield curve is every single yield curve inversion since World War II has ended in a recession. And it's not like instant, like, oh, yield curve inverted, recession's on Monday morning. But it's within a year to a year and a half, generally you have a recession following a yield curve uninverting.
Which is when the recession is officially announced.
Yeah, so like right now we have an inversion. I didn't do the math today, but like our inversion between the 3-month bonds and the 10-year bonds is something like 1.7%, which that doesn't leave you with 98.3% to ball out on. That's 1.7% is a lot. That's like one of the deepest inversions in American history. And so the thing is, like, somehow we're coasting through this. And to answer your question, basically the bond market's like flashing all red lights. It's like, hey, like, this is crazy. There's, you know, serious problems on the horizon, but for whatever reason, the rest of the economy is ignoring that signal in its entirety. It's like it doesn't even exist. But historically speaking, you have the yield curve uninverts. It corrects back to, you know, short-term bonds yielding lower than long-term bonds. And that's kind of when things start to snap. That's like when your Lehman Brothers happens. That's when things fall apart and like the new cycle really truly starts. And so if you think about like economic cycles in terms of long-term cycles and short-term cycles, I don't believe that the short-term cycle that began in 2008 has ended yet. I feel like we've been kicking it down the road, extending it, and I think this yield curve inversion, when it ends, will mark a start of the new cycle. What that means for housing, stock market, whatever valuations, man, if I knew the right answers to those questions, I'd be talking to only my computer and my investment advisor.
We'd have all the money.
Yeah,
right.
we'd be done.
We'd have all the money. Yeah. So, you know, the yield, the bond thing was really interesting to me specifically in blow-ups are things that break. They're never usually exactly the same thing, right? Because when something like that has happened in the past, we change things a little bit so that they generally don't happen again. And, you know, the thing that caught me in the last 6 months that was the most unexpected was the Silicon Valley Bank and those other bank issues. But
To include
not in the same
Credit Suisse.
Yeah, not Credit Suisse, you name them, but not in the same way with the same things that we had. '08 was driven by speculative housing loans given to buyers, basically with no skin in the game, on a large scale, right?
I think we can agree
The
that's
bank,
not happening now.
the bank thing that I didn't see that shocked me, that was really interesting. I didn't know that banks were buying massive amounts of U.S. Treasuries, which, when you think about that, was very self-serving for the United States government, right?
Yeah.
The United States government has been buying its own debt
Yeah.
to keep rates low for quite some time.
If
Right, but
if we're saying
imagine-
that the Fed is the government,
Right, yes. Well, let's just say they are. Yes, that'd be that's a different topic.
I got
Anyway.
the tinfoil hats for us today.
anyway, yes. So they made a situation where, to keep banks honest or safe or liquid, well, you can have certain assets on your balance sheet that are safe, right? Well, one of those assets that they were buying the crap out of to be safe is U.S. government debt.
Right.
And nobody ever went, well, what happens if the United States government massively devalues that asset that the banks are holding, and they're no longer in compliance with their capital requirements, right? And now we have these banks blowing up and doing crazy things, and the Fed having to jump into the rescue and guarantee deposits to prevent runs on banks and stuff like that. I actually do think that that's probably mostly resolved, but what it opened the door to me, was that this could be a further banking crisis. And I started saying, okay, well, all right, where's the bank most vulnerable? Or where is the economy most vulnerable? And where it led me so far is in relations to commercial real estate. This building we're sitting in, my partner and I own this building, and we're fortunate enough not to have a bank loan on this building. But what got me thinking in the last few months is when I got my tax assessment on this building. My assessment on this building is going up. The amount I have to pay if I don't win my appeal is $4,000 greater a year. My insurance bill is coming due as well, so I've got that.
What's
It's
that
up.
as a
That's
percentage?
30%.
Maybe
not.
I don't know. I'd have to do the math because I'm more focused on the fight versus anything else right now. So the bill's going up, the insurance bill's going up, but I own this building and I rent it out in triple net to other tenants, including my real estate company. And what that means is I take the pro rata share of expenses and I divide it to the tenants. So my bill's not going up in insurance and taxes. The tenant's bill is going up.
You being a tenant here.
Me being a tenant as well, but I have to separate the two.
Sure.
But then you combine that with the idea that most commercial mortgages, their term is 3, 5, 7, maybe 10 years. They amortize them longer, but they're due in 3, 5, 7, or 10. So commercial property owners
would have
need
a
to
balloon
refinance.
For you guys who don't know, it's a balloon payment.
Right.
So
It's a balloon payment come due, and the commercial property owners have to refinance. And this reminds me a lot of what was happening to people who had 80-20 HELOC seconds in the housing crisis in '08, right? The cost of that mortgage was going up to the people who own the property. Right, so let's look at my concern from the commercial property side. I'm a building owner, and let's say I'm apportioning out, well, like I am, all that expenses to tenants. My tenant's rent rate doesn't increase, but effectively it does because their expenses increase.
right.
Right. Any blip in the economic well-being of my tenants, their expense here is up. They're either not going to renew or they're going to default and they're going to go. Right. So then I lose potential tenants. But at the same time, let's say my loan came due and I got a refi, and now I got a refi at rates significantly higher than what I have today. So my expense as a building owner is higher, and I'm losing my income potentially because I had to raise expenses on my tenants because the government and the insurance companies rose expenses on me. So now I've got a choice as a building owner because I can't afford the building anymore. I got to put it on the market, right? And then all these other buildings are on the market. Not to mention the challenges that commercial property owners just face nationally because so many people are working from home.
Right.
Right? Companies are in New York, San Francisco, you name it. Big building owners are dying on the vine already, right? But now you take the small ones like me, whether they own a strip mall, an office building, I don't care, right? And they're losing tenants. These banks are vulnerable mostly in the commercial space in the same way that they were vulnerable in the 2008 space. I don't think there's a massive vulnerability from the housing market yet because quite simply, people got to live somewhere. And if you've got a 2.5% interest rate on your home or 3% interest rate on your home,
you lose everything else first.
Dude, COVID taught us that, right? Like people shut down their life, but there wasn't massive foreclosures in COVID.
No, but you had massive checks written from our government.
Yeah, I understand. It did stop plenty of things in that arena, but like even before those checks were written, like I was talking to people that I knew that were renting and worked in the restaurant business, and they just like they made sure they could pay their rent.
Yep.
Right? Like people want a stable living situation, and they'll give up food, cars, everything else they can. It was different in the last time because the expense of owning the home was increasing for them in '08, and they had no skin in the game. Right now, most of these people, they might have $100,000 in equity, and they're like, I'm above water. I've got skin in the game mostly, especially if they bought since '08, and it's the cheapest place I can live.
Mm-hmm. Yeah.
So that to me is what's been, putting a floor under the real estate market. Anyway, that was my riff on things.
So it's got to be the biggest difference between now and '08. Like, I mean, I think like 08's not that recent. It's been 15 years now, but that's like the most recent like real estate crisis, right? So I think like with recency bias, everybody tends to say like, oh, it's going to be like '08 all over again, right? Because that's like the most recent thing we have to compare it to. And being the negative Nancy that I am, I still have to say like in '08, if the cost of your mortgage is going up, maybe you had an adjustable rate mortgage that adjusted upwards, the value of your property is dropping at the same time that your payment is going up. So you have, a street full of alternatives where Muldoon's got a sign in like 3 yards on foreclosures that are just as nice as your house is, or maybe even nicer for 10, 20, 30 grand less than you paid for your own house. So, even if your credit is ruined, maybe there's some way to finagle an even better deal on the same house for less. Whereas here in 2023, you can't replace your mortgage payments. I mean, I have a rental right now where my mortgage payment on that thing is $755. I'd have to move to a different country to try to replace that. I mean, it's impossible. So I do think for that very reason that's a big reason of why we're seeing the inventory still as low as it is. And I think all of the people that are basically now stuck in those 2.25s, 2.53% mortgages, I mean, those people are keeping the bottom in the housing market. I mean, they're not moving. And so no matter how many houses you build or how many people think that the economy is going to crash, like I think we're going to be dealing with this limited inventory for a while.
And shameless plug, I own a company called Assumption Solutions with some partners. What you're talking about there is exactly why we started that business. The FHA, VA, USDA assume mortgages. I mean, it's an asset now, right? Like if you absolutely have to sell and you're going to move on and you've got one of those, right? If things do get bad, those people will always be able to sell those homes for more money.
Mm-hmm. I was talking to a friend about this that owns a mortgage company here in the Springs, and from the real estate side of things, like it's complicated enough, but like the mortgage side of things, like how that industry works, I mean, talk about complex sets of numbers that are interrelated in ways that it's hard for any normal human being to understand. So I called him up and I just said, hey man, you would think that like with rates going up, let's say, a year ago, 2 years ago, let's just say you could get a mortgage at 3%, like very easily, right? And let's say today, just for argument's sake, let's say it's 6.5 or 7%. Common sense would say like, well, why would all these banks want all these mortgages at 3% when they could like re-lend money at 7, right? And so that's one thing for banks, but in talking to my buddy, he was talking about the impact that this has on servicing companies, which a lot of them are banks, but a lot of them are not banks. So the value of the portfolios that servicing companies hold have skyrocketed because now all of these mortgages, these bundles of 2.5%, 3%, these things are never going to refi. These things
So they look at the long-term return.
How long are these things going to stay in the portfolio, right? So if you have a bunch of loans at 7% and rates go to 5%, that servicer's going to lose, 65, 70% of their asset immediately. Everybody's going to refi. It's going to get shoveled out to different servicers. Now you have servicers holding, bundles at 2.5% that are going to, this is like a marriage. Like these people are never divorcing that mortgage. And so those asset valuations are going up regardless of the valuation of the house or what like the whole market is doing.
So probably there's a premium being paid if any of those. I wonder if people are not seeing their mortgage transfer as much because those people that hold them are like, we're going to hold this thing because it'll be in existence a lot longer. We don't want to buy a mortgage-backed security of a bunch of 6.5%, 7% mortgages that are when you buy them, they're going to be refied out in the next down cycle or next rate down cycle. Interesting. I never thought of that.
And the yield curve inversion also, I mean, what we mentioned on earlier, it's one thing to just nerd out and be like, oh, like this number is bigger than this number and historically this and that. But you got to think about the fact that, most banks or most lenders, they borrow money from somewhere else short term. So when the cost of a short-term loan is higher than the cost of the long-term loans have been historically, the consumer is the one making up that difference, right? So if you have, a Fed funds rate at 0 and a mortgage rate of 2.5, that's 2.5 points roughly that the lender has to work with, between the servicer and the loan originator and every other cost that goes into actually facilitating a mortgage. But when you have, the Fed funds rate is at 5 and now the mortgage rate's at 6.5, you can see how their margins have shrunk and they're competing for a shrinking pie too. So you would think like on the surface level, higher interest rates are better for banks, but they're also borrowing money.
Yeah.
And that's where this yield curve inversion really comes into play because it's tightening their margin to the point where, something has to give basically.
Well, and that's, we all learned a lot about the term net interest margin in this bank crisis. I'd never really paid much attention. I mean, I understood the basics of, you give them money, they loan it out, and they make a spread, right? And but what you're talking about is the shrinking of the net interest margin, which is what creates risk in the banking sector right now. And that's where I think the net interest margin is going to be under pressure from the commercial issue over the next several years versus the residential side that we saw in the last cycle where, bad loans, crashing companies like, Patrick's favorite company, Countrywide.
Oh.
They were pretty solid, right?
Yeah.
Decent, honest.
Till they weren't. Yeah, I mean, I can like touch on both these with maybe a little different opinion, of course. I think the one thing that really got us into trouble in '08 also was obviously mortgage-backed securities, right? Because people were sitting on bundles of these that were going bankrupt and they were in their retirement funds, they were held in REITs, and as that started to tumble, that's really what started to escalate this, right? We had derivatives like you can loan $1 10 times. Mortgage-backed securities were tied up in all these retirement funds. I remember when Lehman Brothers went bust, like a retirement fund in France almost went bankrupt the same day because they had all these. And I think touching on what you talked about, the one thing nobody's really talking about, there's a few people out there, is the commercial mortgage-backed security market. So sure, you've got this one loan that sits with this one bank, but then that was bundled up into a bunch of packages and sold off to what otherwise would have been a secure asset, right? Because mortgage-backed securities are. And now let's say in your example, your building's down 40%. because you don't have the rents, and the bank says, well, it was worth $4 million, Craig, but now it's worth $2.5 million. We can get the refinance done. It's just going to cost you $1.5 million. You're like I can, right? The other thing I think that's interesting is the car market is now starting to see they've had an increase of 30% on their delinquencies. And the one thing I didn't realize until recent history there is also those loans are packaged up and sold into the investment market. So you've got all these what could be very toxic assets, and you don't really know where they sit, right? Until this blows up and this blows up afterwards, or this blows up and that blows up. You're like, who's holding the hot potato? It's I've often heard it referred to musical chairs. Like the music's going till it's not, and somebody sits down and there's not a chair. That's kind of how this plays out.
Yeah. I mean, basically what it is what you're saying. It's somebody is out there with the idea that they bought something that they were going to get income out of.
Correct. Typically retirement funds.
And eventually that income is going to prove that it's going to continue to provide it or it isn't.
Correct.
Yes.
Yeah.
I think this is a good time to talk about why the debt ceiling matters, right? Because in a system like we have now, where we have as a nation close to $32 trillion in national debt, like 31.6 or whatever, and we're talking about bumping that ceiling, that glass ceiling up by however, I don't know what, 2-3 more trillion. I don't even know what
Which
the number
gets us
is.
like 4 more days.
Well,
like that's how it feels at
they're,
this
they're
point.
talking about buying us 2 more years, right? And then we're going to have the same conversation again. But I mean, the reason that this debt ceiling agreement is important is because, like this whole game of musical chairs you're talking about, if we don't introduce more debt into the system, then we do actually see deflation.
Yeah.
And when we see a deflationary crisis as opposed to the inflation that we've been seeing, then then Craig does walk away from his commercial building. And then tenants do walk out on their leases and they go into, my house that I'm willing to lease for, 50% less or whatever because my holding costs are lower or whatever the scenario might be. But, when the interesting thing, I think, like one of the most fascinating things about economics in 2023 is that the last 51 years has been the first time in human history that our entire global financial system has been based on nothing more than hope. Hope.
Yeah.
Nothing else. Every single currency is now a fiat currency. I don't believe there's a single gold-backed currency in the world at this point. And
What's the alternative to base it on?
dude, base it on fucking Bitcoin for all I care. Base it on something.
No. You're saying it's based on hope. What's the alternative?
Well, gold is an alternative. Like the fiat currencies have historically been tied to something, right?
But gold is. You hope gold is valuable.
Gold is finite. Right?
Yes, that is true. Gold is finite,
Is
but
it?
we can't fight.
Is it?
We can't fight
Look at Cripple
wars.
Creek. Look at the mountain.
Well, it's finite, in like a geological terms, right? I mean, there is a fixed amount of gold on Earth, but obviously the harder it is to get out of the soil, the more labor costs. The cost of extraction and refinement is translated into the ultimate cost of the asset. And it accurately reflects, things like the labor market and the general, cost of goods and services because it costs money to produce the thing, right?
Yeah.
So I think that's why historically it's held some sort of value. It's rare enough to where, people take it seriously. It's difficult enough to get out of the ground that there's inherent value, into its production and it's finite enough to where you can, it's worked for
Yes, they
centuries.
literally call it God's money, right?
And
Like
I'm not saying over here like, dude, we have to have a gold standard. I'm just saying that for
Tied to something.
For the last, since 1971 is the first time in human history that the entirety of the world has had just paper money.
Which is interesting because Brexit is trying to tie their currencies right to commodities and have some sort of commodity
Yeah, I don't
based
care if it's
currency.
tied to oil or
Right.
wheat or anything tangible. But the thing is, until something changes in that space, all we have to do is create more and more debt to basically sustain this.
I personally, I don't disagree with you, but I don't agree with some of the premises of where you're going. I think personally, right, you don't have to be on a gold standard. You don't have to be anything else. Personally, I feel like at some level, everything is hope, right? Like, look, it's just gold. It's just a rock, right? So you're making up the value on that anyway. You're always making up the value at some level on things.
Sure.
I think the problem and the reason where we are facing challenges we're facing today and that we faced in the past is when you get away from the principle of spend less than you make. And we have a federal and world system that does run on debt, right? Like they just keep using debt to make everybody, because you get in power by giving people things that make them happy or meet their needs to vote for you. So you keep kicking this debt can down the road so that you avoid pain, right? Like what would give me like maximum level hope long term for my kids and everything else would be a balanced budget amendment, right? Where the government, I know, you can laugh, I know, but like,
I love it. I mean, I'm for it.
Right, I'm for it too. But if you think about it, right, like if at the end of the day, the government has to operate like any business, right? Like any business that spends more than it takes in for enough time will not exist.
Yeah, but like that goes back to Iggy's point of having something that it's tied to. We could never go to war if we had to actually back it by something. Pick what it is. I don't disagree.
You would go to war over the thing that you backed it.
I mean, except you've got to own it, which is what Nixon did. He said, well, we've got Vietnam. We can't fight that war without debasing our currency and then creating more. The other thing I found interesting, which blew my mind about, well, you guys probably knew this before me, but like 6 months ago, I'm watching this YouTube video and they're like, money is not created out of anything but debt, hence the debt-based society. So you got to go to the bank. They have no money because I can't pull $100,000 from the bank, right?
That's what's called a note.
But then the minute I take the loan out, all of a sudden you've created that money into the system. So our system cannot survive if people actually start budgeting their own balances. It dies instantly.
Well, no, I don't think it does die. I think there is a place for debt. Right, as long as, once again, right, your expenses and your debt service.
Maybe as a person.
As a country, too. I think it works as a country.
But if you look at the debt on what it's doing, in order to keep us where we're at, we're increasing the debt consistently since basically, 2008 when we really started quantitative easing.
Since 71, honestly.
Since 71, but like it's taking more and more debt in order to keep us, well, we're losing ground. Let's be honest.
Right.
If you're a human being right now, in 1950, I could have bought a house singly. My wife would have been at home. I would have had a car. Everything would have been fine. Now I've got me, my wife, my dog, 2 children working at Taco Bell just to survive. I think the debt-based economy obviously doesn't suit the middle class. For me, it's showing a lot of structure issues again. And I don't feel like we're that old. Like, literally, we're about to go through 2, in my opinion,
we still go to YPN.
deep recessions.
Right.
We still go
That's
to
right.
YPN.
Yeah,
Young
we're
Professionals
young.
Network. Yeah.
I gotta go to YPN too. But to Craig's point though, like I mean, I agree completely with what you're saying. Like we should have basically accountability, right? You shouldn't spend more than you make. The country shouldn't spend more than it takes in. And to me, like the gold standard forced that because you only had a finite reserve. It was published. This is how much you had. The problem became with the fact that other countries saw that the U.S. is on a path to spend more than they take in, and yet the dollar was still redeemable for gold at the central bank levels.
Correct.
And so I think it was France that basically put the hammer down in the U.S. and said, "Hey, we're going to redeem as many of these dollars for as much gold as we
didn't
can."
have the gold.
Yeah, and then we shut it down. We shut down the gold window. But by doing that, we basically said, "Okay, that's the end of accountability. The dollar is now tied to nothing more than." These fictitious little talks that we have in Congress about
opium.
Dude, I mean, they're going to raise the debt ceiling because they have no other
option.
option.
They have no other option.
And then 2 years from now, this shit is going to
raise the debt
and
ceiling
they're going to do it again.
Now, I'd like to
maybe
circle
they'll
back.
shut the FHA down for a week.
Maybe. They'll shut down parks that upset people.
What do you think about this? So on the gold standard versus being off a standard, because
I think it'd be extremely difficult to restore it.
I don't think
I
don't think you will, but I think when you're not on a fixed limit at the same time, right, you actually do have a world where more people can grow in prosperity, because if you're on a finite resource as your standard, right, it's like a zero-sum game. There's only so much wealth to go around. Right? Like, I think you can grow economically not being on stumping with a standard at a broader base. Where you get in trouble is where you wobble out of balance in terms of how fast and how much debt grows. If debt growth is outpacing income inflows, right? Like if the income goes up and debt goes up, I think you're okay, right? That's the balanced budget idea. It's like, okay,
I feel like that's
I zero out.
I'm not
my
going to
federal
disagree
government,
with that.
right?
It's
The
like
more people get wealthy, more people prosper. And let's be honest, in that time frame that you're talking about, like we've had massive wealth creation and standard of living increase, right? Like, I mean, if you're poor in America, you're like in the top 10% of the world, right?
That's been true for a long time, though.
Yeah.
I mean, if you're poor in America, you might be camping out in that corner. Right
And he
there,
is.
too.
He is.
He is, yeah. But he's probably richer than Mexico because he's got a cell phone plan.
I wanted to circle back to like your housing comments because obviously I'm on the opposite side of this. I think housing is going to get into trouble. I don't think it's going to get into trouble like it did last time for the same reasons, which, you know, Shane Bruckner and I always say recessions always happen and they're never like the last. I think where housing gets into trouble, I've got 3 reasons I think housing gets into trouble. First, housing's a lagging indicator. It's the last to go. So what happens first is, and I'm just going to take...
first to go in '08.
It really wasn't. It was like unemployment hit, then housing hit. Now, we had subprime crisis, but that was a derivative crisis with a banking crisis. Then unemployment spiked. So I think if we take Jay Powell at his word, he has been pretty straightforward that he wants to cause unemployment to go up. He has said he wants to readjust housing values. And his way to do this is, his current course is, as the Fed always is to just wreck middle America. Because we typically feel the brunt. I think part of that is the ultra-rich don't really care, and a man with nothing ain't got nothing to lose, so we tend to be that crosshair. But I was going back through the 2008 crisis, and the thing I found interesting in 2008, when you started looking at the timeline, was the first collapses, so we hit 2006, peak. 2007, we had 4 or 5 collapses. Typically secondary mortgage banks. They were actually doing seconds at the time. Then we fast forward to 2008 January, and Ben Bernanke comes out and he says, if this sounds familiar, like if I said this quote right now, you'd think it's Jay Powell.
It's transitory.
The economy cannot get into trouble because we have low unemployment and a strong economy. And at that time, the unemployment, January of 2008, which we would collapse 9 months later, 4.3%. The thing that shocked me when I was looking at these numbers again is by the first quarter of 2009, we're almost at 10% unemployment. So I think what happens is a person without a job doesn't care about the 2.5% interest rate anymore. They got to sell a house. And I think that's what starts shaking this up. And I think Powell is dead set on pushing unemployment far higher than it is. And the reason I believe he's trying to do this, I don't think necessarily it's right, but every time he comes onto the stage at the monthly minutes, what's he say? We're hiking the rates because unemployment remains low. Inflation remains high.
Yeah.
So now what happens now? Unemployment's still low, and today we get the inflation numbers.
FBC numbers went up a little bit.
They went up. They revised them up. So I think Powell's going to come back in and say, we got to raise these short-term rates. Again, inverting the yield curve more. I think until people start hitting the unemployment line, we're safe. I think the minute that starts happening, we're sitting here 6 months or 9 months from now going, who saw 7 or 8% unemployment?
Here's the crux of my disagreement with you on the housing market. First, number one, let's say you do lose your job, right? And you're like, oh no, I'm financially in trouble. You still have to live somewhere.
Correct.
So I think there will be a lot of people who are like everything from renting rooms to doing second jobs to working nights. They've got to live somewhere.
What percentage would you, just off the cuff, I'm not going to hold it to you, but like at what point does unemployment hit a part where it's just like that's not going to work? Like is that 3%, 7%?
I don't.
We hit 14%?
Yeah, I mean, I don't know because, you know, I mean.
Because we'll revisit this, I assume, a couple times as things
we
change.
will, obviously. But at some level, they're just going to say, this is coupled with demographics, right? So I don't know the stats on the Gen Z, which my kids are Gen Z, right?
Aren't they moving back home again?
They're not out of high school, so I mean,
Gen Z's partially out of high school.
partially, yes, but my 16-year-old is not out of high school.
Yeah.
My 14-year-old acts like she's out of high school, but not quite.
Right.
And then my littlest one. But like, let's just take the millennial generation, right? They're double the size of the baby boom generation.
Yeah.
And if you take the Gen Z and the millennial generation together, more than 80%, I think it is, don't own real estate yet. But they have to live somewhere, right? Now, here's the other piece that's kind of, I think, supportive, right? We are of those people buying into the American dream of
Do you think they do that? Do you think Gen Z just on...
Hold on. Here's why. We're going through the largest wealth transfer in history.
From the baby
the
boomers.
baby boomers die off, right? As that
Pop in Gen
generation
X.
starts to... Yeah, I mean, it's good for us.
Yeah.
Well, I mean, both my parents have passed.
Yeah.
And I benefited financially from their estate.
Yeah.
Right? So, you know, my parents' timeline, I mean, they weren't baby boomers. They were older. Anyway, but...
well, except baby boomers, I think, went back to the first year was 45 or 46, right?
Yeah, my parents were both born before the 40s.
Oh, they were?
Yes.
Okay. All right.
So you've got a lot of wealth transfer that's coming into that generation, right? And they need to go somewhere. And we have underbuilt since '08 massively. I mean, we were probably underbuilt from like '08 to like 17 by something like 10 million homes.
I have seen people dispute that. Now, I can't give you stats, so I'm not even going to try. But I've seen 2 or 3 people now dispute that that's actually a NAR statistic. Now, I'm with NAR for self-promotion of building more homes. Now,
Why are the home builders up?
I think part of the reason is, if you look at it, they're offering huge concessions to buy down interest rates. Otherwise, I think they'd be paused out already. Now, let's not forget, we also had 9 straight months of builder sentiment that was in the toilet. So we have 2 that's good, but that's after 9 of, like, we're getting our ass kicked.
I do think builders, well, I don't think it was the whole 9. They started going up last year. But they are selling homes.
They are selling homes.
They are selling homes.
Yeah.
And my point being is, demographically speaking, I think it is supportive of real estate. Now, doesn't mean I'm saying real estate was growing like it used to grow.
Right.
Maybe it is growing like it used to grow. You know,
yeah,
you start
3 to
getting
4, 3%.
1, 2, 3% a year.
Totally
Great, let's get back there. That's
yeah.
where we should be.
That should be healthy,
right?
Yeah.
You know, my kids can buy a home in the future. You know,
that's assuming that inflation is at 1, 2, 3% though.
Yes, right, exactly.
Correct.
Yeah, that's another challenge. I mean, everything we're talking about, like with the commercial space. I mean, how's Powell going to fight? How's Powell fighting everybody's property taxes going up? That's massively inflationary. Insurance. How's Powell?
Can we touch on that for a minute, man?
Please.
We're all realtors in this room, right? And like, you know, my Facebook exploded about 2 weeks ago.
Oh, how many CMAs have you done for the fighting the tax bill? I've done at least 20.
I've done 0.
I was like, I've done none. I've done none.
Maybe it's because I put out a post out there that says, hey, you spent the last 2 years bragging about how much your house went up. Time to pay.
I had people call me that asked me to, honestly, and I just asked them personally. I said, dude, do you think that your value is high or low? But I mean, most people are like, I mean, it's probably pretty close.
Dude, I have never not fight
No,
a tax assessment. I fight it every time I get it.
That's because you've got so much money, you got the time. A lot of people don't have that.
It takes 5 minutes, dude. It literally takes 5 minutes.
I got mine, and so like, you know, I have a rental where I built the second unit in the back. I got the tax assessment on it. It came in. My taxes went up by like 51% over 2 years, and the valuation was probably about 25 to 30K less than what I would list.
Yeah, that was mine too.
So I looked at it. I was like, this sucks. It's a little bit in my favor if I was to really
doggone, if this economy's going to crash, I've got a good investment.
But dude, the reality of it is, like, we can't bitch about the roads and the taxes simultaneously, right? Like, I mean, we can, but like, everything. Dude, like, the city spends money on city infrastructure. The city has expanded to a point where we're like one of the largest per capita footprints in the country, if not the largest. Like the space
Yeah,
that
and the tax base is growing at the same time. It doesn't mean they need to go up 35%.
No, but that can be fixed. That's a different political.
And
we could change mill
and
levies.
I remember when taxes went down on my first house that I ever bought. The taxes went down in 2011.
And you weren't throwing the government money, were
No,
you?
and I remember exactly what 2011 looked like in the real estate market. Nobody was all stoked about their taxes going down because the value of their property just plummeted too, right?
Right.
So it's like, I understand that like your taxes going up sucks, but in the conversation about inflation, like, do you think that the county is spending less money on road maintenance than they were in 2018? They're not.
It's
Labor
up.
went up. Everything's gone up. You know, the cost of a Ford F-450 that they drive around to these construction sites is probably up 40% from 5 years ago. It's not, the county's not gouging.
If the
you 'cause they
county
wanna
was smart,
gouge
they'd
you.
just run a better commercial that said, listen, as prices go up, would you stop feeding your kid?
So what you're saying
I'm saying it's all
is
part of inflation.
is tie it to inflation. Don't tie it to market value.
I mean, that's kind of
a
hard.
slippery slope
That's
too,
a
dude.
yeah.
'Cause
Why? If the cost to maintain the city has gone up by the same cost of inflation because they're using all these inflationary things from oil for the roads to
the problem.
Yeah, but you got to look at like wood didn't go up 6% because
They
inflation went up like what 400% for a while there.
The PCI
Yeah, lumber
doesn't
collapse.
include the cost of
Today.
housing.
Yeah.
Housing is classified as an asset, and the cost of home ownership is not included into those baskets of goods for inflation. So the same guy that's going out there to patch your roads, yeah, you know, vehicles, gas, like maintenance of cars, those things are all included in the basket for inflation. But the house in which he lives in, which is probably 30 to 35% of his cost of living, that's not included. So, I mean, I don't think it's possible to tie all that to just the inflation rate because the way that we measure the inflation rate is inherently flawed.
I agree. You know, they don't want to look bad, so they make it.
Some
how
of your
they,
property values went up too much, and you should
Fight
challenge
it. Just fight it.
But on the average,
just
I don't-
Fight them all.
Fight it all.
Fight it all.
I don't care if it goes down. Fight it and try to get it down further.
get it up.
One of the things I would point out, which for me, I think regionally, now all of us bring in a certain history, right? So like I went through '08, you went through '08, so I remember that very well.
And
And
a bartender through 08.
smart.
The drinking.
There
will
were people,
continue
yeah,
until the economy
people always
improves.
drink. But the one thing I do look
They
at
do?
is wage disparity with housing, which I think is going to be regional as far as that goes. I mean, unless we just end up at 14% unemployment, I think like, but then Rob Thompson, and you guys know Rob, he runs stats all the time, and he and I were running stats, and
The Gronk.
we got quite a bit of gap between what a Colorado Springs person can actually afford and what the housing is. And I think that may close
Was it
here.
a single person?
Just in general, the medium
Married
income
family,
versus
or-
medium housing. But then you might go to Oklahoma and that's not there, and then I would argue that well maybe Oklahoma fares better. I mean I think the Fed's hell bent on correcting this, and I don't.
Running low.
Do we have an example where the Fed got it right? Any example? One example?
Volcker.
Except
Volcker got it right.
Volcker got it right. And he-
Volcker got it right.
he-
Well, Jay Powell loves Volcker.
So
his-
Volcker, if you don't know who Volcker was, he was the final.
he did this to interest rates.
He was the final
He-
Fed guy that came in the 70s and said, okay, we're going to fix this. And he came in with dynamite and basically, he raised the
18%.
rate.
Fed funds rate went to like almost 20%.
Yeah,
His whole thing
18%.
was if inflation rate's at 15%, the
You gotta
funds
be-
rate's got to be like 17.
But I mean, if you went by that today, where would we be?
Well,
We're
at the
there.
height,
I mean,
we should have been.
we're
at the
equal
height,
right now.
At the height, the Fed
You
would
should have
have
been at
raised
9.
rates to 10.
9 or 10?
Yeah.
But now we're
yeah.
there.
Yeah.
Now for the first time since COVID started, right? We are now at a point where the official inflation numbers are lower than the Fed funds.
I mean, the thing that really pisses me off, to be honest, as we crank into the second beer, is there were people in this
Shocking.
room that do not
Maybe.
get paid to come up with any theory economically, and we all said, A, you can't shut down the economy, and B, this crazy amount of creation of money is going to lead to bad things.
Oh, we're
Then-
talking. We're talking about the corona.
I'm just, I mean, you start the pandemic, and then
you
like,
just limited our reach.
We said corona. We're good. We're good.
we're just,
He said the P
I
word.
said the
I-
COVID word.
I can edit it out though.
I just like think, just put that little
Put a mask.
Hubert on me. I'm just saying, like, here we are. So the government says, we're going to create a problem, which they did when they shut us down. And we said, in that moment, March, April, we all said, don't do it. We're going to pay for it. Then they create a ton of money. And we all said in that moment, well, how are we going to not have inflation? Then they come out, the Fed, the professionals, it's transitory. And we all laugh. We said it's not transitory. Then they say it's then speculative stuff. And this is where I would also say I think housing became speculative in many ways. I know you said like, well, back then anybody could buy it. What were Blackstone doing? That was speculative. They're upside down. They won't even let people's money, right?
All that is a bunch of guys smarter than us who said.
But now they're not.
I don't think they're not. I think they're doing okay because, like, at the end of the day, they still own. I mean, they've been buying assets since we've been printing money since '08.
That part was smart.
That's brilliant.
But they were
because they're like. But they're printing money. What happens when they print money?
They were funneled that, though, by the federal government. The government said, hey, Blackstone.
They made it easy for
Here's what I'm going to do. If
yes.
Craig was Blackstone and Patrick was Fannie Mae.
If I'm Blackstone, you wouldn't see me ever again because I'd be living in Italy.
If I was Fannie Mae, I would adjust all of your rates by a quarter point and join Craig in
Here's
Italy.
the other thing I'll say, like, in that whole situation is, you know when we found out things were dicked? Like, the week they were dicked. We had President Bush come out back then. This is why I don't trust any of them. President Bush, he comes out, he says, Fannie and Freddie are solvent. Here's 2 weeks later. Fannie and Freddie need a bailout. Like, come on. We're never going to know till they come. Remember when they said just like 6 weeks ago, they said, banking's fine. They're like, wait, that bank's not fine. Or is that bank, nor is that. 4 banks later, we're not fine.
Well,
But it's only a banking crisis for those banks that are failing. It's really just, it's like a hostile takeover is really what it is.
Yeah.
Jamie
Dimon's like, look how sweet this is.
It goes back to Blackstone, right? Like, the smartest people in the room don't go work for the federal government. Right?
What's that saying?
Why the fuck
when you
would you ever
go
work
teach
for the federal government?
Is what they say, right?
Right? Like, at the end of the day, right? Like, if you're the smart... Nothing wrong with working for the federal government. I'm not saying that. But... if
there's
you're really freaking smart, you're like, well, I could make this, or I could make this.
I know, but let's be honest. Who are the biggest people in the government right now that are not? All the head knockers are Blackstone people in Biden administration. So what do you think they're doing? They're like, listen, this is not a Biden thing. Who was in Trump's? Goldman Sachs.
No.
Who's really running the government? Banking. That's just where I sit.
I see a red dot on your head.
Duck.
Who was the last person to question the Fed?
But I would actually.
It's a fair question.
At some level, I would love it if
to see Robert Kennedy voted in.
I don't know who that is.
You haven't. Oh.
I would love it. I know the Kennedy name. I guess I probably know who he is. But my point is, I would love to see some of the smartest, wealthiest people on Wall Street go, I've made enough. Let's do what works.
Oh, that'd be silly.
That would be...
Well, it'd be silly for them because it will never happen.
It'll never happen.
Because and then you'll get people that say it happened with Trump, but I'll
it never happened with Trump.
But no, it didn't. Trump. The only reason Trump does anything is to boost his ego.
Yeah.
And I voted for Trump the second time, not the first time. Anyway, I'll just clarify that. So I think the problem with the people working in government that we put our faith in is they're moderately smart. They're not the smartest. And I'm not saying I'm the smartest. I'm definitely not.
You seem pretty smart.
You're not mediocre.
You're not running for government. That shows how smart you are.
Oh, yes. Vote for Craig.
We've all been to the DMV, right? Right. The DMV can be better. It can be substantially worse, but they're not on a mission to create the best DMV.
I love where this starts going by beer number 2.
Yeah, right.
Well, here's the deal.
I don't think it's the government's responsibility to prop up the economy.
Honestly, I think here's the problem. Every time the economy fails, it's because the federal government did bad stuff. They screwed up.
But can we?
Well, but they did it. I don't think they did it to be bad. I think they did it
Out of it.
to stay in power.
Oh, sure.
Yeah.
Yeah.
Like they think
We don't have
if I
servants.
help these fucking people, they'll keep voting me in, and that's the most important thing I can do. And fuck the future.
Well, that's the thing about the whole debt
it's so
ceiling, right? It's
frustrating.
like we live on 2-year time frames. That's the American way. Is every 2 years, midterms.
We got a midterm.
Excuse me. So it's like, if your party has to stay in power, if you need to continue to get elected, you have to keep making promises. And unfortunately, to fund those promises, we just have to keep on piling this
You
mountain
can't
of debt.
peel it back now anyways. What are you going to do? Hey, Craig, you don't get your SSI.
My thing
Right.
is this, like, I mean,
We're screwed.
I know you, like, it trips me out in this country, coming from being born in the Soviet Union, like, I didn't grow up there. I grew up here for the most part, but,
But it's still an imprint.
but still understanding, like, how, a command economy works, how a communist state works versus how a free market economy is supposed to work, right? And so then when I look at, like, how the entire stock market is, like, this close to inserting the Fed's dick in their mouth at any given point, like, it's where is the free market aspect?
You better whip out the whiskey here pretty soon.
So I'm just saying, like, if the valuation of my house, your office building, all of our stock portfolios, and anything that any one of the banks around us is holding, if the valuations of all of those assets are dependent on what the Fed does,
Well,
how is this a free market?
It's not a free market. It's crony capitalism.
It's-
And I
Okay,
never
okay,
wanted
okay.
to believe that.
okay. What would happen? Well, I know I'm fucking opening a can.
Do it.
Here.
Here we go.
Here it goes. Hey, do I have tinfoil in here? Let me
One of the most prosperous, epic moments in American history.
What
happened?
What would happen?
Oh, this gets good right
What would happen
If the Fed went away?
if they went away? Are you inserting that in my mouth? I'm not.
Here's what would happen. Okay, so
The last time it happened, the Industrial Revolution.
All right,
happened
ladies
in
and
the
gentlemen.
United States.
All right, you don't have your pen and paper out yet.
Yeah.
Now's the time.
so
Guys,
here's
Patrick
right.
Muldoon is
AI.
about to lay.
AI will solve
I'm
everything.
gonna give
This
you
is AI.
I'm gonna give you guys some secrets that you may not know. The Federal Reserve is not federal.
Where was
Now
it?
you might be shocked, but it shouldn't be. Like, it's a private entity outside of the government. Am I wrong?
You're not wrong.
I'm not wrong. It has nothing to do with the government. The only thing we do is put the Fed chair
Well,
in
it has
place.
a little something to do with the government because it basically tells the government what to do.
Correct. So
It does have that.
I don't know. Trump told Powell what to do.
step
and then he
two.
begged for more money.
Step two is once you realize that the Federal Reserve's not federal, then you have to back that up and ask who made the Federal Reserve. Let's talk about that. J.P. Morgan Chase made the Federal Reserve along with a number of other people like the Rothschilds. So let's back that up one bit just to, I think, lead with some reasons why J.P. Morgan Chase somehow ultimately ends up with
Banks.
all of
Banks.
the power.
All of the deposits.
Yeah.
So if we
For
sit
like 10
there
cents
and
on the dollar.
so then let's back up
brilliant.
one more
It is brilliant.
just to add a little bit, and you guys can Google this. The last president to question the Federal Reserve was none other than JFK,
I don't know, it probably didn't work
Too
too
right.
who then ended up getting lead poisoning shortly after.
Jeez, dude.
Who at the end of that, then his Robert.
Getting hashtag canceled.
So if we
Episode 3.
I'm pretty
wait.
sure this channel just ended.
No, let me just go one extra step because this is the big thing that just came out from Robert Kennedy, right?
I'm taking notes.
What does Robert Kennedy then come out and say 2 weeks ago? Did you guys follow that?
Why'd you kill my relative?
Literally, he said the CIA took out JFK.
So we don't have to worry about him getting elected.
So what I'm saying is, if we look at who's really running the show and you just look at all the decisions made, it's probably the banks, not the government.
Well, so there was, since I got
That
to,
is real conspiracy.
I got to
theorist.
nerd out on the bonds and stuff. So
Go ahead.
the Fed, the Federal Reserve, is the second central bank in American history. That's something that a lot of people don't know. The Fed has only come into existence. The Federal Reserve came into
Do you think
existence.
people made it to this point in our video because this is good?
Dude, the Federal Reserve started its existence,
problem.
its charter
I'm
in
having fun.
1913, the same year that the IRS started its charter.
Which is so
in
strange,
1913.
isn't it?
I did not know that.
Oh,
1913, same year.
Yeah, same year.
Before that, there was, I believe it was called the first. I don't remember if it was called the Continental Bank of the United States or the first central bank.
No,
of the
I think
United
it is
States.
the Continental Bank. I think
It was based on the Bank of England essentially, and so the U.S. had a central bank in the early 1800s. And Andrew Jackson, the guy on your $20 Federal Reserve notes, he was like adamantly against central banking.
Why was that, do you suppose?
In his words, it's because it's
He
nothing.
did get attempted assassinated.
They did shoot him in the head.
So did
unsuccessfully.
Lincoln, who also
So-
questioned it.
Jackson's words, like this is paraphrasing him, but he said something along the lines of, the central bank is nothing more than a collection and a den of thieves. He also had some pretty strong comments about the fact that if our country, the United States, is ever fully under the control of central banking, then we're fucked, essentially, paraphrasing what he said. And he, during his presidency, actually ended the first central bank, like at a government level, by, I don't know if it was an executive order, if he persuaded Congress or whatever. I don't know exactly how he did it, but he did get shot in the process.
Yeah.
Before he successfully disbanded the central bank. I think it was like 1832 or 1836. And so there was about a 70, 80 year period where there was no central bank in the United States. And in the 1840s, I believe, was the last time that AI happened, which was when we had the Industrial Revolution. So aside from the American Civil, right? It was the AI of the 1840s that it was called coal. You could burn this shit to make steam. And
Steam AI.
Steam AI,
yes,
dude.
yeah. Nikola Tesla. They killed him for it.
I mean, let's go to Ford. What did Ford say?
But no, what I'm trying to
He
say
said
is
AI, bitches.
that period between 1840 and 1913, there were definitely like bank runs and, like stock market panics and things of that nature, which was the whole argument for setting up the central bank, was like, oh, these like bank runs and these stock market panics, they're dangerous. And they are, because
It was pain avoidance.
but we still have bank runs.
Yeah.
And we still have stock market panics.
And we're always trying to avoid pain, aren't we?
Well,
I mean, I think, here's two interesting things. I'm going to piggyback off you. Ford came out and literally his quote is something similar to this. You can look it up, which is, if the American public knew how the banking system ran, there'd be a revolution tomorrow.
something like that, yeah.
Right? That's pretty close. And the other thing I realized is, I'm going to just, this was right off what you just said, is I follow this guy, Sylvain. He talks about Bitcoin all the time because Bitcoin is finite. And so he is like, the biggest fear people have about Bitcoin is you actually have to own it and be responsible for it. With money you don't, you have all these insurances. I think both those are probably true, which is if we actually knew how the monetary system worked, which maybe we have a glimpse of that, there would be a revolt because it works against us. Also, I do think Bitcoin is very scary to the government. We're seeing that, all governments. You just had Britain pass some crypto laws that are pretty brutal, right? They're a pretty free country. Canada just passed some. Australia just passed some. And why is that? Because if you don't control the money, you don't control the people. And Bitcoin's interesting because Bitcoin is, in many countries, debanked. For the debanked, they can use it, and they can use it back and forth, and there's no central policy. I would assume anybody controlling money would be worried about that kind of deal getting out there. And I know you're not a Bitcoin guy.
Yeah, no, I don't. I think Bitcoin is stupid. I'll go with Charlie Munger on that.
I like the shit coins. They're much more speculative.
Man, we like to speculate. I always go back personally to two things. One, what's the point? And two, how do you keep it secret?
What's the point of, can you expand?
What's the point of the nefarious thing you're creating? Like, if you understand the point,
Sure.
right, of the nefarious thing that's
Are you talking specifically about the Federal Reserve?
I'm just talking
Or
all
anything.
in
Okay.
general. What's the point of the nefarious thing the conspiracy thing you're trying to create?
Yeah.
Or like, you understand the point of a coup in a third world nation.
Sure.
Get power, kill the fucking people I don't like.
Yeah.
Right. So first of all, what's the point?
Okay.
It's an extension
And
of feudalism.
the second thing is, how do you keep it secret? So let's say you mentioned the JFK thing, all this other shit.
Clearly,
Like,
Robert Kennedy feels it's not secret.
Look, I'm a guy who thinks Lee Harvey Oswald did it and thinks everything else is probably just bullshit. So
With the 13 ricochets of a single I'm just asking.
Whatever. Like, what's that? I don't know if it's Occam's razor or whatever. It's like the simplest thing is probably
we bounced
the
it
truth.
off Pikes Peak, and
The simple thing is probably the truth. Right. So
His wife.
a conspiracy, maintaining. Look, I mean, anything that's known by more than one person isn't a fucking secret. And if you're gonna do something that's massive, world-changing, good luck.
Let me ask you this: why haven't they released the actual papers then at the federal government level for that assassination? That would be my only question. If there's nothing there, release it.
I don't know.
And what about the?
Then we wouldn't even be having. But let's just go beside that.
Right, but all those people are fucking dead. All those conspirators.
There's a lot of paperwork.
All those conspirators are fucking dead
in our lifetime.
But I mean, to Patrick's credit, the Federal Reserve is not federal.
It's not federal.
It doesn't have a reserve.
There's 6 families. There's no reserve.
You think Jay Powell doesn't answer to anybody?
I don't know. I didn't say that. I do think he answers to a lot of really powerful people.
Yeah.
I just don't necessarily think that those people are strictly for like American interests.
I think the idea of powerful shadowy
This thing just
people.
went so good.
I
hope everybody made it to
idea
right
of
now.
powerfully shadowy people is a fucking ghost story.
You think so?
I
Wow.
do. I
That
totally
surprises me
think
with
it's
you.
a ghost story.
I think you're wrong.
Like, I think people act with their power in their self-interest, but being able to maintain things since 1913, forget it. Like, you can't think of the real estate community, right? Like, you can't keep, you can't,
getting deep.
the real estate, you can't keep gossip out of a real estate office.
I don't think that the
minutes.
gossip's out of it. I just think it's like, we have nothing to do with it.
I think it's tinfoily hatty. And I think it makes people. I think it makes people justify. Okay, this is not working the way I want it to work, or this is a good answer
in our
for the
history.
shit that's fucked up.
I would agree with you, except then I would say, how many times did Ron Paul, current in our history, while we've been alive, go, let's audit the Fed? Never happened. You realize to this point in time, the Fed has never been audited? 0 times. None. Why?
Try auditing the fucking United States Army.
They tried that. It's not going well.
Yeah, look.
But
As a guy who does his own taxes and knows books, like accounting's hard, man. It's hard.
Especially
so you're gonna try and audit them. You can't audit the Army.
Episode 4, simple tax.
Imagine if you go to Italy.
I'm there with you. I am there with you. Yeah.
I'm just saying you could alleviate a lot of the conspiracy theories, and that, like, let's just look at the.
Imagine if Craig goes to Italy and leaves. Like,
I'm gonna steal a term.
Just writes it off.
I'm gonna leave a cerveza. We're gonna call
All
it.
I'm going to do is talk to real estate
The
companies.
cerveza. Okay, so when the cerveza came along, we had a lot of conspiracy theorists that we look back and we're like, we were right. Wasn't wrong.
I would say we were partially right.
95% right.
Yeah. Well, that's partially.
What were we wrong about?
I don't even know. What were we wrong about?
We were wrong about underestimating fear.
Oh, God, that is so...
Underestimating.
That is... Okay, so this is going to be episode 4.
Underestimating...
will be this conversation.
What people would be willing to accept because they're scared of dying.
I'm blown to this day, and we're gonna make this episode 4. So if you made it this long, episode 4 is gonna be this topic. To this day,
Coronas only.
I used to say, I remember sitting with Kevin Betts. I hope he doesn't mind me using his name here.
His name is Kevin Austin.
Kevin Austin, and we were sitting at a bar, St. Patrick's Day, coming into that parade, and I literally said the stupidest thing I've ever said. There is no way they're going to shut this country down. To this day, I am blown away how many people were like,
do you remember
I'm
the
out.
flame I got when I started the hashtag open
Yes!
April 1st?
I started like freaking tagging. I'm like, this guy's right. And they're like, you burn in hell, Muldoon. I'm like, then the funny thing is,
nicest people I know.
Nicest people I know.
You're killing
I'm
grandma.
reporting
And I
you to
was
the
like-
police.
I was like, look, man.
This is going to be
I'm trying to make sure
because I
grandma
remember
from Ukrainian relative doesn't starve in a hovel in the future.
Which we still don't look.
Yeah.
China's even getting
No.
sketchy. I mean,
90% of what we're dealing with
is
right
from
now
that.
is from this.
And I remember you and I sitting at the office because nobody was open on St. Patrick's Day, and I was like, Iggy, come over.
Yeah, we
there's
drink Jameson. It's
there's
wrong.
5 of us, and we're just drinking Jameson and beers.
For the record, I went to so many bars while they were closed.
So many bars while they were closed.
And
Well,
that's it.
I didn't get one invite.
And coffee shops, but let's save that. So let's wrap this up. I don't know where we're at now. How much time?
This is fine. I don't know.
So the aliens killed JFK. The Federal Reserve owns us all. What am I missing here for the summary? Residential housing should be okay. Commercial housing
Probably not
should go
okay.
shit.
We'll see who's right.
We really don't know anything. We're just a bunch of talking heads, and we're either fucked or we're not. So
What's next week's topic?
we'll figure it out.
Cerveza. The Cerveza.
Maybe.
Hey, listen.
I'm not going to be here next week. I'm going to be in
2 weeks out.
I don't know.
Episode
We'll
4.
see. I'm stopping. Everybody, thanks
Guys,
for joining
we
us.
appreciate you. I hope you made it this
Patrick,
far.
Craig, hope you had fun. We had fun whether you listen or not.
Salud.